Not much movement today. But the good news for me, and I think for most traders, is that the market didn't respond irrationally too much to the minutes. It just came right back. This is the minute pop, and the down came right back. But the minute did outline a little bit about how it could still be hiking, and some participants say they should stop and um, let the market absorb it, let the economy absorb the rate hike. And some participants were saying it should continue to hike until the continue to rapidly hike until the restrictive limit, which is I think 3.4% or something like that. So that's still a couple more hikes. That's still 125 more points, I guess, from right now. Yeah, so it's like kind of same thing as what Jay Powell talked about, and the market responded not heavily this time, which is a good thing, which is a good sign, because they shouldn't. But it seems like leading up to that, nobody knew what was going to happen, so it dipped a little bit, but came right back up. So basically, it didn't move. But I think the good news is that the rally has ended. Let me see, meaning that the yesterday's close is higher than today's close. This great. And okay, so first of all, the opening price prediction, it actually opened lower than the price prediction was actually it was gonna open lower, but even lower than the prediction, so which is a good thing. I was holding puts, so it was good for me. um, and then it just opened here and dipped here, and from the S1 it jumped right back up to the pivot, but before the pivot was the minutes. So over here it jumped right back up and then came back. I thought this was just strange run up, so I was looking at the level 2s and the time and sales a lot. And the way to use this to spot spoofing, because that's definitely real. Some people say that's not real and that doesn't happen. There's like a conspiracy, similar to the market maker being like the dark individual or dark entity, which is not true. Market makers are just like the representation of the exchange. They just make the market. Spoofing is kind of tricking the market maker. So traders, a lot of traders, they manipulate the market, the price, or they trick people to trade, give an impression. So how they manipulate the price, they will put in a lot of orders either on the bid side or on the ask side, and the algos will recognize that and then put a slightly higher price at the ask. Let's say they're buying, so put slightly higher price at the ask in anticipation to the price popping. If let's say somebody's trading, if we see this, if we see like 2,500 on the ask size over here, then we can expect that it could pop, right? So algos would recognize that and put a slightly higher price ask and put their position before that, before the order fills. But the big size, they would just take it out when that happens, so they would have that price hiked and then start selling it so that they could get the maximum range out of it. That's sometimes what we see in the spikes. We see high volume spikes and then immediately sinking back. That's sort of spoofing, and that happens. Although it's illegal, that happens all the time. But if you do that for a number of years and make, I don't know, 40-50 million dollars out of it, then it becomes an issue. But I think once, or like in small sizes and small scalping, I think people just do it all the time. But the way to recognize is just look for the on the long side, just look for the ask size. If it's, and it really depends on what type of stock that you're trading. So for SPY, anything, to me, I think, anything going above million dollars purchase is a big size. It could indicate some kind of a direction. So what is a million? So let's divide that. 3 divided by 429 is, so if anybody buys more than 2,300 shares, you see 23 here above, that's million. And see if that fills. If it fills, well, I have it set to 5,000, which would be 2 million, I guess, at this price. So anything goes above 2 million, and then this one is hopping, then you could kind of see that that's what's really happening in the market. But if you see the number here, but you don't see it filling here, then it's kind of a spoofing. So you could avoid the, and then even the fake outs. You could see like a super huge order here, but what's filled is much less than that. Then you don't have to go for the fake out there. You could see the price popping up like this, but you don't have to follow it, is basically what I'm saying. Yeah, so the way I got this closing price range is just Fibonacci. It's from low to this high. Well, I didn't count that high. Low to this high 50, it'll go retract out 50%, and from this high to the low, 50 retracts. So the range I got for the closing price is here, 426.83, and from here 428.26, and it seems to be closing it like that, which because what happens is when the run happens, and if it's hitting the pivot point, or this is and is kind of obscured by the pivot point, but that's also the closing price of yesterday. And if the by the end of the day price moves to the closing point of the day before, that means there's nobody made any money or lost any money. Basically, it's just all the money is in the market since yesterday, which in itself means bearish. That's a bearish definition, because the money didn't move. So that's why it's closing lower, but also because it's closing lower and the rally has ended. The whole trading week had a streak of closing higher. So because it's ended today, because we're closing it here, I think tomorrow's we're gonna open lower as well. So we're gonna go down for a little bit, is what I think. It did close right by the end of the closing price prediction mark right here, which means to me that it's more bearish, that it has passed the 61 point from the highest down here, and it has went below the 50, which is means the rejection of the trend. So I would change the closing price, opening price, down even lower to the full 100% retract of the Fibonacci on going upside, which starts from 424.50 to the pivot 427.30.